2 years ago, the volume in crypto markets was 4 trillion. Last year, it was 20 trillion. This year, it's going to be 60 trillion. That's exponential. It's gone from 4 trillion to 60 trillion in 2 years. This is ludicrous. And I keep talking about this pace of adoption, but people don't get it yet. There is a bit of a curve flattener, and it's very normal at this point in the cycle, as I've been saying. I've said that most likely at some point between kind of March and June next year, people are going to be saying, oh my God, are we going back into recession? It's very normal at the early part of the cycle, post-fiscal stimulus, the economy hasn't got its traction, we see this curve flattening, and then eventually it steepens again. I think it will play out the same way. I don't know what trend rate of growth is in the US anymore. I'm guessing it's probably below 1.5%. The market hasn't figured that part out because we haven't got a clean data read yet until we get rid of all these year-on-year effects. So I think that's to play for, and we'll wait and see in due course. All of these technologies are now reaching mass adoption phase at the same time. And the whole thing behind it is this is the fastest pace of technological adoption the world will ever go through. And it's all happening. And it's across everything from life sciences, genetic sciences, AI, distributed data, 5G, 6G, robotics, space, 3D printing, I mean, you name it, and it's all happening. So the world is going to look incredibly different in 10 years' time. It's going to look nothing like what we know. And I know that sounds scary, but you can be an optimist. And, you know, here at Real Vision, we're in the business of investing. When things go exponential, you can make a lot of money.
Yeah.
So following these exponential technologies where their earnings go exponential and their adoption goes exponential is truly a gift of an opportunity. And anybody who's been involved in the crypto markets in the last 2 years has seen what exponentiality means. And we haven't started yet. 2 years ago, the volume in crypto markets was 4 trillion. Last year, it was 20 trillion. This year, it's going to be 60 trillion. That's exponential. It's gone from 4 trillion to 60 trillion in 2 years. This is ludicrous. And I keep talking about this pace of adoption, but people don't get it yet. When you print money and it's free, nobody cares. We crossed that Rubicon, you know, a decade ago. Nobody cares anymore. You know, let's start a new initiative. We'll just print money. Let's bail out the banks, we'll just print money. Let's keep the credit market solvent, we'll just print money. Let's make sure the equity market doesn't go down, we'll just print money. No collateral is allowed to go bust in this environment because we're too leveraged as a world. So no central bank wants collateral to go bust. And that is what's going on. That's the equity market, the credit market, the bond market. They don't want the currency market to move too fast and too far, because if you let any of this collateral go bust that all of this leverage is based on, the whole game's over. Shouting and screaming that the biggest macro trade in all history is underway. It's crypto. Macro is crypto. See my interview with Dan Tapiero. He's the same thing. He goes, I don't care about the bond market moving 1% up or down when crypto is doing, well, Ethereum's up 500% this year. And somebody says, what's the macro play? This is the macro play, whether you like it or not. So is there a macro spill on? Well, we've just come out of a recession, so the probability of a macro downside event outside of a VAR shock, limited. You know, I've talked about the growth. Will growth slow? Great. You know, bond yields drift back down to, 50 basis points. I can't get excited. I just can't get excited. When you've got the exponential age and crypto, where the risk reward is so gigantically, preposterously skewed, nothing else makes sense to invest in. My contentious view is energy is becoming digitized, and in that is EV. So you're taking it, you're transforming it from being a process by which you extract something from the ground and burn it for energy to a using of renewable energy, which is infinitely scalable. So if you have an infinitely scalable input, you will drive the price of energy down to zero. That's where it's going. That is the logical outcome of technology. Digitization drives everything down to zero because you can make everything infinite. It's happened with computing power, cloud, phone calls, data, everything, and it will happen to electricity too. Sunlight, nuclear, wind, waves, hydro. Those things are almost infinite in their energy output. I mean, the amount of per hour of sunlight is like all of the energy on Earth for a year or something stupid. You know, there is so much excessive energy that has no harmful impact in converting to a usable energy source, i.e. electricity, that technology will just keep racing to extract more energy from natural resources and output it at cheaper and cheaper costs. So can you imagine a world we're going to live in? It's part of the exponential age thesis, and I've got a bunch of charts showing this is underway, where green energy is significantly cheaper now than all other forms of energy. And that's going to just keep going and going and going. And we're going to live in a world with free energy. What does that mean? What can we do? What is our productive output for the whole society if it doesn't cost anything? Think of what's happened with data and the fact that data on our mobile phones is basically free now. Or the fact that they gave it away for free in India, and suddenly the largest per capita data usage on Earth on the mobile phone network is in India. These things, and what does that do? It ignites commerce, it ignites communication, it changes things. So yeah, it's huge, and it's coming fast as well. The cash generated in the Ethereum ecosystem is like 100x the rest of the entire space combined. Something of that magnitude. There is a gigantic growth in the network, unlike any other space of this magnitude. That network has more use cases than almost any other network, well, it's by far in crypto, but most networks in the world. It has a restricted supply because of the burning of ETH from the gas fees. Everybody is staking their tokens for ETH 2.0, so you've taken loads off the exchange. Then there are hundreds of billions locked up in, or about 100 billion locked up in DeFi, NFTs, and all of that. That actually leaves a free float of Ethereum of about 11%. 11% is all the available Ethereum that you could buy if you went into the marketplace. And we've got that demand shock going on in front of our eyes. Bitcoin has nothing like that going on. Yes, there is a supply shock. Yes, there's a bit of a demand shock, but it just doesn't have the network intensity that Ethereum does. And the same is happening to things like Solana and Terra and others at an earlier stage. So they're smaller networks and they're starting to get exponential growth. So they do well too. But yes, I'm probably now, I don't even know anymore because I bought some options as well. As I said in my tweet last night, I'm probably 85% Ethereum. Probably because I bought a bunch of options. I'm was about 5% Bitcoin, and then a bunch of volts. But I don't know yet. I think it's because I added the options, it's kind of skews the numbers. If I'm just looking at the pure spot, it's probably 75% Ethereum, 5% Bitcoin, and 20% others.
Mm.